Welcome to the Motor Carriers Insurance Education Foundation offerings of in-depth review of coverage addressing the unique operations of a motor carrier. Motor carrier loading and unloading will be the subject matter today. This webinar is not filed for state CE credit and is a learning opportunity only. If you need state CE credit, please contact our office and we'll give you the opportunities for CE. If you have any questions, please send an email to trs@mcief.org and we'll answer those questions that you might have. Concerns. Responsibility of what is being loaded into an insured's truck. If it's loaded wrong, could be involved in a crash. While unloading, the property being hauled is damaged, or others are damaged, either bodily injury to people, the public, property damage to public, or employees are injured. The coverage forms we're going to look at today to address these exposures or these concerns is the cargo form, the auto liability form, particularly who's going to qualify as an insured, and the auto liability and GL form and how they would address the damage, what is damage to the public while things are being loaded and unloaded. So let's talk about who will be involved. The first type of risk we want to talk about is a drop and hook. A drop and hook is where a motor carrier takes their tractor or their carrying compartment to a loading dock and the customer loads it. The reason you call drop and hook is typically the motor carrier will drop their tractor, just leave the trailer sitting there, and the shipper will load the trailer and seal the trailer, and then notify the motor carrier to come pick it up and haul it down the highway. And so when does the motor carrier accept responsibility? This is going to be a consideration. This will be spelled out either in the contract or the bill of lading that your insured has with motor carrier. Our concern here is a lot of cargo policies have the words care, custody, control, or care, custody, or control, or responsible for. And so you want to look at these operations, look at the contract, and see when the insured might be responsible for those goods that somebody else loaded on the trailer, even sometimes before the power unit's hooked up, to make sure that if something happens to that product, at least the cargo policies that you're writing will address it and provide defense. And if the fine you're insured liable for it, will pay for the injury. So the first thing in drop and hook is when does insured assume liability for the cargo and how that matches the cargo policies that we're providing. The second is what is being loaded. The driver signs a receipt. And that receipt says or is verifying what's loaded and the condition of what's being loaded. Can the driver see what's being loaded? Typically drop and hook, no. In fact, some of the drivers aren't even allowed to be around. They want to keep them away from the loading dock, away from areas they could be hurt. If the very best they might have is a lounge or something that the driver could sit in or look at or be in as they're waiting for this. But they have to sign a receipt. And since the driver could not see what was loaded, could not verify the condition, they need to make a note on that receipt that the customer loaded and count. What that basically says is, I don't know what was in there. All I have done is signed a receipt for it that says it was loaded and it was sealed and the seal number on it. And so that's important to start with. The second part is when it's now being delivered. The thing you want to make sure is to find someone that can sign it at the consignee's party to sign it that it was received and received that was still the seal on it. This is important later because one of the provisions of the Carmack Amendment, which will address most of the transportation that our insured will be involved in, dealing interstate motor carriers hauling processed goods of others across state lines, the key part of that is the customer must prove what was damaged, and it starts with what the driver received. If the driver cannot verify what's received, then they need to note that, so that will not be an area where the customer can come back and say, well, it was received and you acknowledged it, yet the driver did not know what was received or not. Kind of the very important part where you have the items now being delivered, and all the items that were supposed to be delivered were not delivered, and that would be a defense that we would have against your insured being liable for those items that were damaged or not delivered. So now we are loaded. We've hooked up our tractor and we're driving down the highway. The truck turns over. The next question is why. If it's a driver error, meaning the driver made a mistake, the insurer then is responsible to pay for the cargo and damage to the public. That's what the Carmack Amendment requires them to do. If the customer is involved in a lawsuit, meaning that they're named vicariously because they're being held liable for the actions of the insured, then the customer will qualify as an insured. There is a white paper on our website that addresses the liability for the additional insured provisions that you might want to refer to. However, if the truck turns over because of being improperly loaded, so in these cases, that's the customer's negligence, not the driver's negligence. So there's no protection for the customer under our liability policy, because now it's the customer's negligence, and the only time the customer qualifies under the who's insured provision or the liability policy is when they're held liable for the actions of the driver. In this case, it's their own negligence. There's also no exposure under the cargo, because the Carmack Amendment would say that's shipper error, meaning the shipper did not properly load it. In fact, we would have an opportunity here to subrogate back against the insured for the damage to our tractor trailer, and any other, try to recover any cost of defense and things like that. Now, I grant you that determining what caused it cannot be done early on. So this is going to take a lot of investigation. The first thing that the auto liability policy would do would be respond, but under reservation of rights, particularly under reservation of rights as it does to the customer being able to qualify as an insured. And also a lot of times that would go ahead and address the cargo, and then because of the Carmack Amendment, you got to clean it up, you got to salvage it and do those kind of things, and then come back and make a claim back against the shipper, or before you make a payment for that cargo damage done back to who the owner, which in most cases would be the shipper, you would delay that. But that's how it works. Load and hook, you've got to verify what was there. If you can't do it, you want to make sure that you notice on the note on the bill of lading or the receipt that driver did not count it, does not know the conditions, not verifying it, and find somebody to sign off of it. If a crash happens, then it's a big difference between the driver causing the crash, where in those cases we would owe the cargo, we would owe defense to the customer because it qualifies as insured in the various liability. However, if in the drop and hook, since the customer loaded it, if the reason it turned over was because of the load not being properly done, then that driver, the customer, it does not qualify as insured, we would not be liable for the damage to the cargo, and we could seek subrogation back against the customer for the damage caused by their negligence, meaning not loading it properly. Now let's talk about insured involved in loading. This is where driver can actually verification. They're seeing it. They could be loaded, if it's loaded, to make sure it's loaded properly. They sign a receipt for the loaded items. They have and also they note the condition of the loaded items. Cargo, and then if the cargo policy is not delivered in good condition, and it's important for the verification. So we do hear where the customer's involved in it, and they need to verify this, particularly for food goods. We'll talk about that in a few minutes, to make sure it's done at the proper temperature and make sure it's kept in the proper temperature. Even in those cases, you want to make sure that the trailer has a proper Thermo King in it, the trailer gets properly cooled, so there's no problem with that. But now the driver can be involved in it. And so the driver needs to now be told, or be that they need to make sure that they don't sign a receipt unless they can verify, because now again the trailer's not sealed yet, the driver is watching it be loaded, that what was loaded on it, the count is correct, the items being loaded is properly loaded, meaning height, meaning temperature, meaning tarped or not, and then at the other end find out if it was delivered in good conditions, and then there's a verification of that needs to be important in the receipt that then the consignee signs. So the bill of lading will be who responsible for unloading now. We've delivered it. Now we have to unload it. The cargo, the consignee acknowledge all is in good condition. This is what you want the driver to get from the consignee, the person there to sign. If not, then you get into OSDs. OS&D stands overages, shortages, and damages. This is when there's an exception on the receipt that the customer did not receive everything they were supposed to, or what they received, some of the items were damaged, or in some cases it could be overages, which doesn't create much of a problem unless it's something involved in LTL, which would be involved in somebody else didn't get what was supposed to be done. The real concern we have in here is things that could damage the public and could turn into a partial loss to a total loss. If there's food goods, if there's anything that can be consumed in human or animals in a bulk situation, they fall in the Food Modernization Act, which gives the customer ability to reject the load for about any reason. Or if there's concern with a warranty. The example I use in classes that we teach on the face-to-face is if your insureds are hauling a load of car seats, and that load of car seats gets turned over, even though the boxes might not be crushed, the load of car seats is not going to be able to be put back in the marketplace, because there's no way that the owner of that property is going to allow it to be put in the marketplace unless we, the insurance industry, verifies there's no damage to those items. So that's where we have a total loss involved. Also, there could be involved in protecting the brand, high value stuff. They don't want that to be sold at a flea market and things like that. Or they altered, if it was altered or could not be saved in a good condition, then that's a problem here. So in these situations where there are things that, like pharmaceuticals, food goods, warranties, brand, or I found things that could be altered, doing and cannot be saved or in the area, then you have to worry about, is it items can be damaged? Is it salvageable or not? Can it be resold? This is going to be a question, because this is going to mitigate our damages, because when something happens in a crash situation, which is the most cause of losses, then what we have to do is salvage what we can, meaning pick it up, store it, and then try to resell it. However, if there's no resale, now we have a situation where the customer will not let us resell it. In that case, it would be on the bill of lading, the shipper controls the salvage. You need to worry about these, because what we have done in these cases is turned a partial loss into a total loss. And you also have to make sure how your insurance carrier looks at this in cargo, because now is a gray area. What is damage? Because most of our policy says direct damage. Well, is it direct damage on those car seats where the trailer turned over and the actual car seats themselves were not damaged directly? However, we can't prove they're not damaged directly, so it becomes adulterated, so therefore they have to be destroyed. That's a gray area here, and it would be unique hauling. One good part about this is most of these things we're talking about, the revenue to haul it generates a little more dollars for the motor carrier, because they are harder to handle and they have more liability in those areas. When the driver is unloading, the items get damaged. How far from the unit? You got to look at this. I looked at 3 or 4 policies. Again, when we teach the face-to-face, we talk about it. Some of our policies say we cover it the curbside or dock side. That's fine for drop and hook. But if your insurer is involved in any involvement to take it beyond drop and hook, in other words, there's not a dock that they pull up to be unloaded, then you need to look at footage. How far away? I've seen 50 feet, I've seen 1,000 feet, I've seen 5,000 feet. Obviously, an auto hauler, you might want 1,000 feet. For a tanker operation, maybe 50 feet will be enough. So the problem here is that all cargo policies are different, and you need to read those cargo forms, just like we talked about earlier. When your insured is responsible for it, care, custody, control, care, custody, or control, you need to address those things. You also need to address the policy have defense in or not. In this case, you need to find out how far, when your insured's involved in unloading, with a forklift, by hand truck, whatever, that you want to find out how far do they have an obligation to take the goods off of their truck to the final destination. And this is to see if the cargo is being damaged during that part of that. That will be addressed in the cargo policy. So let's talk about damage to the public. It could be property of others, where your insured could run over a customer's equipment. They could put liquid in the wrong container. They could damage the container when they put it in here, or they could damage the public. They could run into somebody, a customer's employee. They could run into a public, somebody just in the public, or even the employee, the owner operator could be hurt during the loading and unloading, or during the unloading process. So now we've got to talk about what policy responds, the auto liability or general liability. In other words, what we're having is an unloading situation where the driver is involved in that unloading, and now as they are unloading those items, the public gets damaged, either because of bodily injury, hitting somebody, putting in a wrong place and somebody trips over it later, or the property could be damaged, or in the case of the employee, the owner operator could be damaged. This is what our concern would be here. So the general liability covers the auto or general liability. What one policy covers, the other excludes. That's the key here. Auto liability and general liability are designed to work together. If no general liability, the auto policy could have more exposure. At least you'd have to defend yourself. This is a consideration for underwriting. A lot of smaller motor carriers are not going to buy a general liability policy until customers force them to. But from an underwriting standpoint, I think you need to be aware, if you're involved in any unloading process, and loading too, but more important, unloading process, then you need to make sure that they have a general liability policy. If not, if all you're writing is auto liability, you have no fallback. You're going to end up at least defense, if not paid more. It's also important to have the auto liability and general liability with the same insurance carrier if all possible. Why? So they don't point fingers at each other. So the question here is not will they be covered. As a retail agent, as an insurance provider, as a claims handler, the best thing you want to have is not a question of coverage, but what loss line to charge the claim against. That's what you want to have. And in this case, it's even worth more dollars to have the auto liability and general liability with the same insurance carrier, so there's no gaps in coverage between the things we're going to be talking about here. If not, you're going to end up having people point fingers at each other. You're going to have lawsuits where some of it might be covered or some will not. That's the consideration. Let's look at this. Here's the consideration, and we're going to now talk about loading and unloading. I contend that I can make an argument where that is an auto liability case for this person standing on the sidewalk that gets hit by a piano. Why? Because it's a moving and storage company. The moving and storage company has a responsibility to take the piano to the 14th floor. On the 12th floor, the employees of the moving and storage company lose control of it, and it comes out the window, and as it falls out the window, it hits the public person on the sidewalk. That's an auto liability claim because they never got it to the 14th floor. This is what needs to be understood, and this is what we're going to look at now. The two main liability forms are auto liability and general liability. Does the insured care which forms to respond? I don't know. They just want to respond. This is why it's important as a retail agent and an insurance company to write the coverage with the same insurance carrier so one of the others would respond. Does the insured even know what the differences are? Obviously not. They think they have coverage. They say, agents, trust me. And they hear you say the famous words from a retail agent standpoint, you have full coverage, whatever that means. The auto liability and general liability provides combined coverage to address the insured's liability exposure. It's a combination of it. What one excludes, the other covers, and vice versa. And this is the point of them working together. They don't stack, they just work together. They meet the gaps in each other's. And so what we're talking about in the liability policy involving unloading, you have the exclusions 7, 8, 9, and 10. That is the movement of property, the completed operations, the mechanical equipment, those things involved here. And what's excluded in the auto liability policies and exclusion 7, 8, 9, 10 is covered because it's not excluded in the GL exclusion G. And so this is how it works. The GL exclusion G does not exclude what the auto policy excludes in 7, 8, 9, and 10. So this is how they work together. Let's review some of this policy wording. This is in the auto liability policy. We exclude in 7, handling of property. We exclude, meaning don't pay for, bodily injury or property damage resulting from the handling of property before it's moved from the place where it's accepted by the insured, meaning while it's sitting on the dock. So we exclude it before that. But once the insured starts the movement onto the power unit, for movement onto the covered power unit, it's no longer excluded, and it's not excluded until after it's moved, and here's the key part here, to its final delivery by the insured. The final delivery is the final destination point. In the case I mentioned to you earlier, that would be the 14th floor. And so that's where the auto liability policy. So it does not exclude when we're loading it, once we touch it, while we're transporting it, and then it's not excluded until it gets to its final destination. It also says in exclusion 8, we exclude bodily injury resulting from the movement of property by mechanical device. That is a crane or a forklift or a front-end loader, other than a hand truck, unless the device is attached to the covered auto. So anything has to be unloaded by a mechanical device other than a hand truck, we'll talk about that in a minute, or that's not attached to the carrying compartment, will also be excluded. Operations, which exclude bodily property arising out of the operations of any equipment listed in the items that's mobile equipment or not, or the machinery that's on it attached to the part of the land motor vehicle. This is where you have the difference between auto liability and general liability. We did not take time here to look at that, but you need to look at those definitions between what's an auto and what's mobile equipment. And here we're talking about things that like snow plows, cherry pickers, yard tractors, cranes, drill rigs, which will be a gray area between the two. And so those things you need to sort out is, do your insured have anything that's mobile equipment that, in the case of mobile equipment, that would be possibly the insured could be using, and that would exclude that. That would be covered in auto policy, and that would become, if it's compulsory, to financial responsibility. So what is excluding 7, 8, and 9 is addressed in the general liability policy. General liability policy excludes loading and unloading, but exclusion G excludes operations of autos owned, operated, loaned, or rented to an insured, and operations including loading and unloading. So loading and unloading are not covered. And so we look at the definition of loading and unloading. This again, going back to the exclusion 7, 8, and 9. Loading and unloading means the handling of property, again, that was 7, after it's moved from the place where it is accepted. So what we're saying here is, where if you go back and think about what we did in exclusion 7 a couple of slides ago, it said before the move in auto policy. Now this is after. This is how it works together. So what it says in the auto policy is we exclude it until you touch it, and now that the motor carrier has touched it, the general liability policy now excludes it. And excludes why it's being carried, that's the B, and C, why it's being moved from the auto onto a place of its final delivery. Again, that's go back to the auto policy. This is where the exclusion 7 says now it's no longer excluded. So this is where you have the mirror image of each other, where the auto policy excludes it before, the general liability policy includes it after on both of these cases. But loading and unloading does not include the movement of property by means of a mechanical device other than a hand truck that's not attached to the car, to the aircraft, watercraft, or auto. So that gets back to exclusion 8, which says the same wording here. We exclude an auto policy, but in this policy it says in loading and unloading does not exclude those items. So let's look at something here. Overlapping out there. When a truck's being loaded and unloaded, what form addresses damage to the public? Auto general liability. Very simply, damage to the item itself, loading and unloading, is not covered. That's because the care, custody, and control exclusion. This is why you got to make sure you have cargo coverage, and you got to make sure that the cargo coverage extends the coverage on the cargo policy to the point of the loading and unloading responsibility addressed in the bill of lading. That's different than if it's damage in the public. because cargo forms are different. So don't read into the same coverage here to think the cargo form is going to cover it, what we're talking about here. That's a unique part, and you have to address the cargo policies. We're now talking about damage to the public. So it basically says before movement starts, it's GL, meaning when it's sitting on the dock, somebody trips and falls, or it falls over. When move starts, first touch to start the move by the motor carrier's driver. It's auto if moved by hand truck, or equipment attached to the auto until the item being moved reaches its final destination. At the final destination, then excluded on the auto policy, and now GL, the complete operation is GL, will pick it up. If moved is by a mechanical device not attached, then it's GL, meaning a forklift, loader, or crane. That's how it summarizes what we're talking about. Let's look at some examples. We already talked about the household mover, didn't get to the final 14th floor. Show horses. Your insured takes a show horse to it, and as they're unloading the show horse by the bridle, they're taking it to the barn for the fair to be done. And going there, there's somebody yelling and screaming at the horse. The horse bolts and damage to the public. Auto GL, damage to the public, the people. It's auto because we're unloading it by hand and haven't gotten to the barn yet. Once at the barn, now if we didn't properly put the gate down and it comes back out, then it becomes GL. Again, got to think about that final destination by hand. Sure's unloading a can of beer. This is my favorite client. Some of you have heard me share that with you. That's Mark 5 Distributors, a beer company. This was an actual case where they were unloading a beer, a hand cart load of beer into a supermarket to make a display. And as we were turning down the aisle, there was a lady bending down, picking up a can of peas, and we wiped her ankle out. The driver wiped her ankle out to a tune of $7,000. That was auto liability, even though the truck was parked about 100 feet from the entrance even to the supermarket, because we did not get to the final destination. In this particular case, it was to the cooler, but they were making a display. What would happen now is if the display then falls later after it's made, then that becomes GL. Unloading a pallet of mulch with a forklift. That's where the truck has the flatbed, you're handling pallets there, and the forklift's hung on the back. If the forklift falls off, that's auto liability. If the forklift damages the public as the forklift's being unloaded from the flatbed, meaning the customer loses control of it as they're taking it down and hits somebody, that's auto. But once it hits the ground and starts unloading the mulch, running over a mailbox, hits a car and drops all over the roadway, then that becomes GL. So as we're unloading the forklift and as we're carrying the forklift, if that falls off, then it's auto liability. But once now we start unloading the pallets with a forklift, the forklift's no longer attached, then that becomes GL. When unloading gas at a filling station, a customer of the gas station puts a quarter into a vacuum device. It causes a spark. It acknowledges the flame. It hurts the driver and the customer, auto and GL. Well, the question here is, where did the fumes come from? If the fumes came as we're unloading, then it's auto. If the fumes came after it hits the bottom and comes back up, and then it's GL. If we're unloading the gas into a diesel tank and we damage the items in the diesel tank, the gas that's in the diesel tank, then that is auto. But now that we pump the gas out that was in the diesel tank, that was not in the diesel tank, and now we have damaged the pump, and now the public's using it, then that becomes GL. Gray areas. Motor carrier operation, drop and hook. Typical driver does not touch freight, just picks up, loads trailers, and delivers the load to the consignee, who then unloads it. So there's very little exposure here. This would be the only type of risk that I would have any comfort not having a GL policy, even though I'm not comfortable for any risk not having it, but at least from the unloading perspective. When does the driver have to load and unload? Dry van or reefer operation. Typically, the driver sees these happening. The driver's involved in it, but they don't have unloaded here. But here again, what are they unloading it with? With a forklift? Even if the customer owns the forklift, they might be involved in it. Or a non-motorized pallet jack, or a hand truck like we talked about in the beer delivery here. Now, you talk about even the pallet jack. We have some pallet jacks that have to be pulled with no motor in it. That's no non-motorized. We have some pallet jacks that have a motor on it. If the pallet jack has a motor on it, then as we're unloading and then we damage the public when we're unloading somebody, then that is GL. If it doesn't have a motor on it, it will be auto. Tankers always have to be loaded and unloaded by hand because a driver has to hook up the item to be unloaded. They put a hose on it, and then they take the hose to the area to dump it into it. If they're damaged to the public, the hose is laying out there, or again, what they're unloading gets in the wrong reciprocal, then we damage what's in the reciprocal. We could damage reciprocal stuff. But now when the items get used because it's put in the wrong reciprocal, then that would be GL. So that's how you handle that. Flatbed will always be unloaded by a forklift. And so when unloading with something detached would always be GL. Live animals, again, pallets, bridles, or getting the items into a bin. Until it gets into the bin and the gate's closed, then it's auto still. Auto hauler. This is a last example I'm going to give you. This is one that I dealt with here. Auto hauler. Don't worry about what's a covered auto, because the situation I had, they said we're not going to cover it because that auto being unloaded was not a covered auto because we only had symbol 7 specified autos only. When we're unloading autos, it's property. It's not a covered auto. We're unloading and loading by hand. We're driving it off. This is where we have the bodily property of it. It's auto liability. The damage to the car itself is a form of cargo. It's a Bailey's form, and that's garage keepers. A cargo policy Bailey's form too. Garage keepers is endorsed with auto policy. So we have this example, addressing a situation where an auto hauler, while unloading a car, runs into the property of others. That's autos. First, the car that was being unloaded is not covered under auto policy because it is in the insurance care custom control, exclusion 6, and any damage to the car will be addressed as cargo, meaning garage keepers would be where you'd cover this in most cases, or it could be covered on a standalone standalone cargo policy, Bailey policy. To understand the coverage, you need to not think of the car as an auto, but as cargo. The removal of the car from the transportation by hand is driven off. The 2 exclusions are in all ISO auto forms are 7, handling of property, and 8, movement of property by mechanical device. So it's being removed by not by mechanical device. It's being driven away. So it's not excluded. Then it is covered in an auto form. So while loading cargo, the car is cargo. If the public is damaged, BIMPD, while taking the car to its final destination by the insured, the damage is addressed in the auto liability coverage form as long as it's not being moved by a mechanical device, meaning a forklift, a crane, or things like that. Symbols have nothing to do with handling the property. Symbols address the auto that brought the car to the point of being removed from the covered auto, not what's being unloaded. If the auto that brought the car to the location for delivery, the coverage would be then triggered by the symbol. Garage keepers added to the auto liability damage to the cargo would cover the loading and unloading if the cargo form it does not. Lastly, heavy haulers and dump operations. Loading and unloading will detach a crane or front-end loader. Those would always be covered under the problem loading and unloading by the GL policy because their mechanical device have to be unloaded or not. So it would be auto, but if we have a crane attached to a power unit that carried the item, now that would be auto liability until it's sitting the ground. Unless the crane that are not covering the item is being used, then that would be GL. So that would be the questions that you would have addressing those gray areas. For all insureds involved in loading and unloading, the contract, the receipt, the bill of lading spells out when and what the responsibility of the insureds are. Car consideration, what was received, when you became responsible for it, what caused damage, and then how you document those things. That will be involved in driver training. For auto liability, crash before delivery. What caused the crash? insured or customer. That will determine all liability and who qualifies insured. Who will be an insured? If it's not responsible, then the customer caused it, then we will not pay for that. Auto and general liability. Does the insured have general liability? If not, was it offered? Unwritten, if it's not, there's more exposure. You want to try to keep it with the same insurance carrier. And so that's the summarization here. We hope you get something out of this program to better understand the coverage provided to a motor carrier, cargo, general liability, auto liability, how they work together when your insured is involving in loading and unloading the trailers that they're hauling property of others on.